It's the weekend and you're joining me on your favorite show, your Weekend Money. In today's episode, we've decided to put together a step-by-step guide on how you can achieve not one, but a 10 crore target in investment goal in 20 years with the right investments, a good amount of time spent in the market and the right asset allocation strategy. Also, if you have not started your investment journey till the age of 30, 35, is it still an achievable target? We find out today. Mohit Gang of Moneyfront joins me on Smart Money. Mohit, thanks a lot for being with us here.
Thank you. Always a pleasure, Sonia. Thank you.
So, that 10 crore number, right? First of all, it looks like a very unachievable number at the moment, but 20 years from now, given the way inflation is going, given the cost of living, the value of the 10 crore is not going to be as much as you think. So tell us, why did we pick that number and is it an achievable target?
Oh, absolutely. As daunting as it might look, to be very honest, I think 10 crore is something which everyone who is about to retire in about 20 years, 25 years from now should be aiming from. And I'll try and put it and break it in simple math to kind of explain why this number is not a very big number and why this number is something which we should not be looking forward to. Look, so at a 10 crore corpus, and suppose you're retiring at an age of 60, which I'm sure most of us are planning to retire at that age because that's the government stipulated rate, that's the age at which most of the corporates ask their employees to retire, so on and so forth, right? At a 10 crore corpus, if I assume a 4% withdrawal rate, and that's a very universal thumb of the rule kind of a formula, that 4% withdrawal will sustain you for around 25 to 27 years of your life post-retirement, right? So if I assume a 4% withdrawal rate, that means I need around 40 lakhs per year. Now 40 lakhs a year kind of amounts to 3.3 odd lakhs a month, right? Now that 3.3 lakhs a month looks like a very big number. If you ask me honestly, are our expenses 3.3 lakhs a month? As of now, not. But if your expenses are also between, let's say, 50,000 to 75,000 rupees a month, in today's term, in today's value, right? 75,000 rupees a month after 25 years, Sonia, with a 6% inflation will be 3.25 lakhs a month. Okay. So if you're spending 75,000 rupees a month, and anyone who's doing that, anyone who's doing a number closer to do it, lesser than it, or maybe higher than it, then beware, your expenses at age 60 after 25 years are going to be 3.25 lakhs to a 3.5 lakh kind of a number every month. And that's why I feel that if you have a corpus of 10 crores, you will be able to live a very happy life. That will in fact mean that you have a withdrawal of an amount equivalent to 75,000 in today's term.
But are you including some of these large expenses that we have to make, whether it's our children's education or children's marriage, etc., or not including that amount?
As of now, I'm not including anything. It's just the retirement corpus, which one should be aiming for. If you have to live peacefully, settle down in your hometown, settle down somewhere else, but you want an expense which is in the range of around 70,000 to a lakh every month, and you think that'll be the expense in today's term, then you have to aim and shoot for a 10 crore corpus.
Okay, so all of you folks who are between the age of 20 and 40, right, you will need 10 crores in your corpus by the time you're 60 in order to just basically just live, right? I mean, we're not even talking about travel expenses, children's expenses, all of that. Let's take this step by step then, shall we? What are the ingredients that you need to achieve 10 crores in the next 20 years? And if you can help us with different scenarios age-wise.
Yeah, sure. So look, I think we'll go with the basic math first. Any future value is equal to what you can put in or park today in terms of your present value multiplied by the rate of return, which is the compounded annual rate of return what you're investing, of the tenor for which you are investing, which is the time horizon, right? So there are three critical ingredients in this entire equation, which is the present value of your corpus, which is what you can invest today, what you can put aside today. Second is the rate of return, which is the rate at which your investments are growing, right? And we can all argue what is the right combination, equity, debt, asset allocation, so on and so forth. And we can very well assume a rate, which is a generic rate of return which markets have been giving to us, right? And the most important and the critical ingredient out here is time. If you give time to your investments, right, the compounding kicks in. And compounding is sheer magic, Sonia. Both of us standing out here can't even visualize. We can't think geometrically. Our minds are attuned to think arithmetically. We can do 6 plus 6 plus 6 plus 6, but we can't do a 6 into 6 into 6 into 6. And we'll just fumble at the fourth step, right? And that's what compounding does to your investments. So when you put the time factor, which is the most critical factor, that will lead you to a huge corpus and that will create magic in your portfolio.
Okay, so the power of compounding, right? So I want to understand the different scenarios. So what we've done is Mohit has very helpfully put together a couple of charts for us, and I request my director to just pull up a 10 crore corpus, say over the next 20 years, right, at different tenors. Okay, here's the first chart. Let's go with this. Now, what we've done is we've assumed here a fixed SIP, and if you increase your SIP by 10% annually, right? So this is for a 1 crore corpus. We're not even talking about 10 crores here. This is the amount, and assuming a very nominal 12% annual return, the amount that you will need is, you need a lakh per month if you want to achieve a 1 crore corpus in how much? In about 6 years, right?
6 years
and
with a fixed
20 years,
SIP.
with 20 years, about 10,000 per month.
Yeah.
And if you top it up, you want to take us through this, Mohit? Go ahead.
Okay, let's do this with the 10 crore corpus. I think they'll give us a perfect picture of where we want to end up if we get to that.
Okay,
yeah,
here
I
it
think
is, yeah.
I think this gives us a very perfect picture. So look, I think what most of us will have today, and I'm just assuming that the audience out here is roughly in the band of around 30-35 years, and we can all tweak it accordingly as per the chart out here. But let me talk it out for an age group of around 30 years. We have a good 25 to, let's say, 30 more years to go for the retirement, anyone around that age group, right? And if you do a fixed SIP of 25,000 rupees a month, that will take you to a corpus of 10 crores, assuming a 12% return in 32 years, right? So if you are at an age of around 28 years, 30 years, you are fairly well slated. All that requires is a 25,000 rupee monthly SIP without breaking it, without tweaking it, without churning it, without redeeming it. Continue it in a disciplined manner for 30-32 years. At a 12% rate, you will reach your corpus. How do you make it quicker? How do you make it fast? If you increase that amount just 10% every year, right? All of us get our bonuses, all of us get our increments. We're all working in corporate lives, or we are doing our own stuff, right? So if you can just increase this amount every year in a disciplined manner, and this might not, let's say someone might argue that my salary increase is not 10% or so on and so forth, but you can always pump in your bonus to make sure that an amount equivalent to a 10% increase is getting into the SIP every succeeding year. So which will mean that the 32 year will fall down to around 25 years in terms of corpus accumulation, which is a good 7-year kind of a reduction in reaching to that 10 crore kind of a corpus.
Okay, so if we can just go back to that chart, I'll come to this chart as well in a bit, but if we can go back to that chart, yes. So what Mohit is trying to say here is that you can save a good 7 years if you just top up your SIP 10% annually, right?
Absolutely.
With an amount of just 25,000 rupees a month. I think it's pretty achievable for a lot of us who work in this age group of about 25 to 40 years old. Got that. Let's move on to the other one as well. And this is, of course, assuming a very average nominal 12% return.
Right.
Now, there was another chart that came through. If I can just ask my director to pull that up as well. Yes, this one. You want to explain this one to us?
Okay. Have a 20-year horizon, right? And nothing more, nothing less than that. So this is a computation at 20 years. The computations can vary by a few thousands here and then, depending on what you're rounding up to, basically. But if I want to achieve a 10 crore corpus and my rate of return is 15%, and I just have 20 years, then my amount to be invested is 66,000 rupees a month, right? But if you kind of increase that by 10% every year, then that 20-year horizon will become shorter, or this amount will become lesser. So either the amount decreases or the tenor decreases, depending on how you want to tweak the entire equation. But the three factors of the equation, the critical factors out here is the return, which we are assuming. We are taking a 15% return out here, and the time. The time plays the most important role, because the longer the duration, the more the power of compounding in this.
Okay, now there's a very interesting question I have here, right? So considering someone like me, I'm 37 years old, so just take ballpark 40 years old, right? In 20 years, by the time I'm 60, if I want to achieve a 10 crore corpus, I need to, if you go by a very, this is a higher rate of interest that we are assuming.
We have a chart with the 12%.
12% as well, yeah.
So we have taken all scenarios. I think this is all assuming different combinations. So look, Nifty life till date has delivered around 14.5 kind of an IRR or a CAGR return, right? We have a chart with the 12% return. I think the previous one, we can take that for computation.
Okay.
We have one more on 10 crores actually. Yeah, I think this one.
Okay, so this is the one that we're looking at.
Yes.
So if I have 20 years in hand, rate of return is 12%, I need to invest 1 lakh per month.
1 lakh per month without any increments.
That is at this age of 40.
That is at this age. I'm not assuming any previous corpus out here. If you have any previous accumulated corpus, which most of us at that age will have something saved somewhere, right? And that portion is also growing. So that will add on to your kitty. But standalone, if someone fresh were to start at this age and still wants to accumulate a 10 crore, right? Though you're still you're a little late in the race, but if you invest with a 1 lakh amount every month, you are bound to reach that corpus, assuming a 12% return, which to my mind is a very fair return to assume.
It is a fair return. So this is the table that you really need to see, right? Amount of years you need and the amount rate of return. This is the monthly expense or monthly investment that you'll have to make in order to reach your 10 crore corpus. Hope this was helpful for our viewers. Let's do one thing. Let's take a quick commercial break. Lots more coming up on the kind of investments that you need to make in order to achieve that 10 crore corpus. Stay with us. Welcome back to Smart Money. 10 crore corpus, that's what we're discussing today. And no, it's not unachievable. If you plan well, if you invest wisely, you can achieve that target. Mohit Gang of Moneyfront is here to tell us. Someone of my age, perhaps if I start late, right? If I've just started my journey, to get that 10 crore corpus, I would need to invest at least 1 lakh a month for the next 20 years. That's what the graph had shown us. But you're telling me that there is another better way to do this. Tell
Absolutely. First of all, Sonia, it's blasphemous for you to say that I was starting late. So you're not allowed to say that.
Assuming.
But yeah. Okay. Look, if you have 30 years in hand, which means you are currently at an age of 30 or you're sub 30, that's when most of us start our earning journey. At 25 years, 27, 28 years, that's the time when people start earning. If you start right at the time when you start earning, and you park aside only 15,000 rupees a month, Sonia, right? And you give 30 years to your investments, you are fairly well set to achieve a 10 crore corpus. That's 500 rupees a day. If you were to break it down per day kind of an investment, it's 500 rupees a day. It's cost of a pizza today in a city like Mumbai, right? So if you can...
Not even that. Pizzas have become very expensive.
Okay.
But wait, the trick is here, right?
Yeah.
This rate of return, 15%, where can I get that?
No, so even if we take a 12% return out there, right? So that's 1,000 rupee a day. Yeah. If you have 30 years in hand, and I'm not computing if you are increasing your SIP by 10% every year. And I'm assuming all of the investors will go through a cycle of increments, will go through a cycle of bonuses, so on and so forth. And they will very well keep increasing this amount. It will not remain static. So if you start with a lower amount also, let's say you can't start with a 30,000 rupee amount, you start with a 15,000 rupee amount, but keep increasing it. If you give that 10% increment, the number of years required reduces dramatically. So that's the whole thing. The whole trick is to start as early as possible. Start with your first paycheck. If you delay it, the process gets delayed and the end accumulation.
15% rate of return, right? It's not very ambitious if you think of it. What is the mix of investments that I need to make between mutual funds, NPS? A lot of people have EPF, but they also invest in PPF. Yeah. So what's a good mix to achieve that 15% target?
Look, honestly, I think equity is the only asset class which will kind of, or which can potentially deliver you that kind of a return, which is around anything upwards of 12%. Other than that, if you ask me whether PPF, NPS, EPF, any other small saving schemes or any other fixed income format will give you that kind of a return over a very long horizon, obviously not, right? That's more a different corpus and a different kitty. It's for your safety, for your smaller needs, for your regular needs, and for your immediate requirements. Let's say for a 3-year, 2-year kind of a goal. That is when you will park money in debt, right? So as much as required by your asset allocation, by your risk profile, keep that money aside. Keep doing your PFs and PPFs because obviously that's a good retirement corpus which will yield you years. So that accumulates at a different rate. But equity is the only asset class which will perhaps yield you higher than 12% returns if everything goes well. And obviously India as an economy is doing great. We all know that story and everything. But if you see Nifty trend for last, since the time Nifty was born in this country, the returns have been around 14.5% CAGR annualized. I'm assuming if the same story continues for next 30-40 years, you are fairly well set to achieve a rate which is higher than 12%.
Okay.
But to be very conservative, very, very safe, I would still request all investors to go with a 12% rate. Chances of you going wrong are fairly small out there.
Okay. We also have a very helpful table that Mohit has put out about the different scenarios for different age groups, right? So I'm going to just request my director to pull that up for us. If you're in your 20s, if you're in your 30s, if you're in your 40s, right, there are different ways that you can plan this. So you want to take us through that?
Yeah, sure.
Okay, here you go. How to make a 10 crore corpus depending on what your age is. Now, if you're 30 years old, this is the investment that you need, and you've assumed 15% returns here, right?
Absolutely. We have assumed a 15% return out here. If you have 30, which means you have around 30 years to go, you have 40, you have another 20 years to go. These numbers could be rounded off to the nearest possible, right? So I think around 17,000 to 18,000 is what you need to park every month aside in terms of achieving that 10 crore kind of a corpus. All I want to show Sonia out here is that 10 crores looks a very daunting and a big number, but if you break it down month by month, brick by brick, it's not a big number. It's not a big number, absolutely not big for someone who is in the age bracket of 30 to 35 years. Anyone lesser than that age bracket, it's an absolutely doable number. If you're above 35 and you've missed the bus of investing till date, then perhaps the amounts might be a little higher, might be a little bigger, but you can always start by increasing in year on year and make it still simpler. So that's the only thing which I want to kind of say.
Okay, there's another question I have here. For a lot of people in this 30 to 40 age group, they plan to buy a house, right? For whether their own consumption, a second home, whatever. A lot of people live on rent as well. How do you adjust that? What's the best way to do it? Should you take should you buy a house in the early stage of your life and then pay off the EMI, or do you live on rent and, you know, hold off your home purchase? What's the best way to keep in mind your 10 crore corpus target?
Look, to be very honest, buying versus renting will warrant one full episode. It's a fairly complex equation, and to solve it mathematically, I'll always lose the battle against the people who want to rent it out. Mathematically and financially, you can't argue for a case because the rental yields are hardly 2.5% in a city like Mumbai, and pan-India, it's hardly around in that same band of around 2.5 to 3.5 odd percent. So it doesn't make sense. So buying doesn't make sense financially, but with the peace of mind, one particular residential piece gives you the comfort of not changing it every 11 months and not scouting for a new place, so on and so forth, right? I think you should have that one residential home, but if you're planning to take one, you have to just keep aside your retirement corpus. This is your wealth created for your retirement life, for a happy, prosperous life, post your working life. House is within your working life, for which you have to provision separately, whether it is 5 years away, 10 years away, plan out, charter out that goal, figure out what is the corpus required, 1 crore, 2 crore, whatever could be the corpus. Work it out mathematically. It's not too tough. Honestly, a 1 crore corpus in 10 years is not a great amount. If you build it brick by brick through SIP route.
Sure.
You just have to plan for it.
So since you said SIPs, how can one make their SIP simpler?
Okay, look, so I go with very simple formulas on this one. If you're not the ones who are tracking markets in and out or tracking the performances of the funds and just trying and chasing the fund manager who's delivering you the highest alpha, so on and so forth, to make it very simple and to cut the cookie completely and to make it for a 30-year kind of a portfolio, just invest in index funds and sleep very peacefully. You can forget about it, right? You buying Nifty, and Nifty is automatically adjusting itself with the best companies of this country. You don't have to bother about it, don't have to like really chase 1% higher return or 0.5% higher return, for which there is no surety, right? I would have still chased it had there been a permanent surety that yes, I will beat Nifty consistently quarter on quarter for next 10, 20 years. But if there's no surety, I would rather buy the index and keep it very simple.
Okay, we have one question coming in from our viewers. I just want to take this with you. What should the ideal ratio be if we want to invest in NPS and mutual funds through the SIP route?
Look, NPS is still a safer bet, right? NPS though is for your retirement, but in NPS you have those life cycle stages. You can buy an aggressive fund or a moderate fund or a conservative fund, and the management is not the management of the NPS per se is a slightly more conservative management than a mutual fund. I would still assume that a mutual fund will give higher returns over a longish time tenor if you hold it for 20, 30 years. So my sense is keep your NPS limited to whatever your tax advantages are, right? And then put the remaining amount through mutual funds.
Okay, guys, so, we're going to wrap up now, but I just want to get those charts up for you back on your screen, since in case any of you missed it, it is not unachievable to get to that 10 crore target. If you plan well, you can do it. So just request our director to once again pull up those charts and revise them before we sort of end the show. There you have it. This is, of course, a 1 crore corpus, which I think now that we're talking about 10 crores, 1 crore seems like a much smaller amount. Okay, you want to just take us through this?
Yeah, look, so The numbers are all there for people to look at it, but I would just try and put some don'ts around it in terms of what people should avoid doing. One should avoid redeeming and churning too often, right? If you hold it through the highs and lows of the market, that's when you will make the most of it. For every year, markets have seen a correction of more than 10%. Every single year, right? So if you can't hold within those corrections, you will never make this amount. So people have to hold through corrections. Don't try and churn too much. Stick to your asset allocation. Try and see if you have low yielding assets in your portfolio, which is if you have too much of FDs, if you have too much of real estate, if you have too much of gold. Look, these are great safe assets. These are assets to fight inflation. These are not assets to create wealth or retirement corpuses. So try and limit those assets within your portfolio, but try and go more for equity in your portfolio, again, depending on the risk profile. So increase that allocation. Be very, very systematic and try and increase that amount gradually.
I think the number for me, the magic number is this, right? 50,000. Because for all the people in my age group between 35 to 40, if you invest 50,000 per month with a SIP increasing 10% annually in 20 years, you can achieve your 10 crore corpus.
Totally doable. Look, I think 20 to 25 years is the goal which one should give to himself or herself, that I want to accumulate 10 crores within 20 to 25 years. That's a fairly doable thing. If you have the provisions and means to increase that amount, you will do it much faster. If you're more disciplined, you will even do faster, right? So it's a combination of being disciplined and having the provisions of increasing the amount.
All right, we've run out of time, but this was really an engaging discussion. Mohit, thank you so much for joining
My
us
pleasure.
and helping us plan our financials. Financial freedom is everything, right? It's a superpower, as we say, and we're here to facilitate that for our viewers. With that, it is curtains down on another special edition of Smart Money. Thanks for watching.